once again before you. In accountancy, already you know we have been dealing with the chapter number 5, that is admission of a new partner for class 12 CBSE syllabus, right? So in today's session we are going to have discussion on hidden goodwill. We'll discuss the concept and we'll do some numericals as well, right? Okay, so very first let's talk about its concept. What is hidden goodwill? From where this term has been generated or not? Okay, see what happens. Sometimes a new partner who is coming into a firm, he does not bring goodwill in any form, neither in cash, nor through check, nor in any kind, right? Okay, one situation. Another situation is that in the question, value of the firm's goodwill is also not given. Means the concept of hidden goodwill will be applied in two situations. One, when the new partner, incoming partner, is not bringing goodwill in any form, right? Another, when the value of firm's goodwill is not given in the question. Okay, so in such situation, the goodwill has to be calculated on the basis of the net worth of the firm, right? How? I'll show you. Okay, so it is inferred. The word is used here, inferred. Inferred means just to have estimation about something. Okay, so in this way, inferred value of goodwill is known as inferred goodwill or hidden goodwill, right? So two terms can be used here, inferred goodwill or hidden goodwill. Understood the point? Okay, now after this procedure, what happens? We get the value of firm's goodwill. Okay, out of that we'll have to calculate the share of goodwill to be brought by a new partner, and thereafter one adjustment entry is passed. The entry I have already told you in previous videos. Okay, today we'll do numerical on that, but before that let's have discussion on the steps for the calculation of hidden goodwill, right? So here are the steps. Very first step is calculation of the net worth including goodwill. Be cautious here. See how it is to be calculated. It's very easy. Total capital of new firm. How total capital of new firm is calculated? New partner's capital multiply reciprocal of his share. Now what does it mean? Say for example, new partner brings 50,000 as capital, right? For 1/5 sharing profit. Understood the point? Now how this total capital of new firm will be calculated on this basis? I just show you. We'll just put the values in the formula. New partner's capital, that is 50,000, multiply reciprocal of his share. Reciprocal means just opposite. So here it is 1/5, we will write down 5/1. Nothing more we have to do. Then just multiply it. 12,50,000. So this 12,50,000 will be total capital of new firm. Understood? Okay, now what we have to do? Next step, calculation of the net worth. Okay. This will be known as total capital of new firm, or you can name it net worth including goodwill. Okay. So second step, calculation of the net worth excluding goodwill. Okay. Means here goodwill is included and here goodwill is excluded. You need not do anything more. It itself will be done. Okay. This is there just to remind you. Okay. When we reach the third step, you will understand why we wrote down here including goodwill and excluding goodwill. Okay. So net worth, what is the formula of net worth? Net worth is equal to sundry assets minus outsiders liabilities. And what are the outsiders liabilities? Outsider liabilities means except capital and reserves and surplus, whatever is belonging to third party, that is outsiders liabilities. Whether it is sundry creditors, outstanding payments, loans, okay, and unearned incomes, etc. Understood the point? Okay. So there is one more formula for that. Actually it depends on the question. If in the question sundry assets and outsiders liabilities are given, then net worth will be calculated with this formula. Okay. Or if these details are not given, then other details must be given, then this formula will be applied. Okay, that is what adjusted capitals of old partners. What is adjusted capitals of old partners? Actually, what happens at the time of admission of a new partner, whatever changes are supposed to take place, whether it is related to revaluation of assets and reassessment of the liabilities, or it is related to the adjustment of accumulated profits, losses and reserves, etc. Okay, after doing all the adjustment, whatever the balance of capital of the old partners is there, that is known as the adjusted capital. When we attempt the numerical question, I'll explain in detail. Okay, plus new partners capital as it is given here, this one. Okay, plus net accumulated profits and reserve, if any. If there is any profit and reserve is given, that will be added. Okay, minus fictitious assets, you know very well what are the fictitious assets. Okay, minus non-trade investment. Okay, or you can put here any kind of losses there, that is also supposed to be subtracted. Okay, now after calculating this net worth, which is excluding goodwill, here goodwill is included, here goodwill is not included. Okay, step 3 is what? Calculation of hidden goodwill. What we will get by this? Value of firm's goodwill, that is net worth, means that we calculated in step 1 minus net worth that we calculated in step 2. Okay, here goodwill is included, here goodwill is excluded. So after deducting net worth, excluding goodwill from including goodwill, what amount will be left? Purely the amount of goodwill. Okay, and that will be the value of firm's goodwill. Now out of this we'll have to calculate share to be brought by new partner. On the basis of this, and then we'll pass adjustment entry. Okay. You will understand in better way when we attempt a numerical question. Okay, so let's attempt the question. You can see the question on your screen. So I have written the question here. This is the case 7 in the series I have already discussed with you, and the problem 13. Arav and Vikram are partners in a firm sharing profits in the ratio of 3:2. That is their old ratio. On 1st April 2020, their capitals are rupees 3,20,000 and rupees 2,40,000 respectively. On that date, they admitted Puneet as a new partner for 1/4 share in future profits. Puneet brought in rupees 3,20,000 as his share of capital. Past journal entries on Puneet's admission. See, like I told you, there are two situations. If two situations are there, then this is a case of hidden goodwill. Let's see here. He has not brought anything as his share of goodwill. 1 point. Another, the value of firm's goodwill is also not given in the question. Fine. So we need to calculate. And as far as concerned about the journal entry, one entry will be related to the capital and another will be related to the treatment of goodwill. Okay, but very first we need to calculate. So according to our step we'll go. We'll not mention here the steps, but we'll go according to that. Okay, very first step was there to calculate the net worth including the goodwill. And how? I just write down here once again. Alright, total capital of new firm is equal to new partner's capital multiply reciprocal of his share. Let's see. What is the new partner's capital? 3,20,000. Fine. And what is his share? 1/4. That will be reciprocal, means 4/1. Let's calculate what is the value here. 12,80,000. Right. Now we'll go to step number 2. What was the step number 2? To calculate the net worth excluding goodwill. Okay. And for that, two formulas were applied. One, sundry assets minus outside liabilities. No situation is given here like that. Okay. Second formula will be applied here. Okay. So what was the second formula? Okay. Only this much formula will be applied here. Adjusted capital of old partners plus new partners capital. Because no other value is given here. Fine. Okay. And one more thing let me tell you. These are the capitals given, means these are the adjusted capital. Why? Because these are given on 1st April 2020. Okay. That is the date of admission. Understood the point? So these are the adjusted capital. Fine, let's do the treatment. Right. This is the capital of Ara, this is the capital of Vikram, and this is the capital of Puneet. So that is 8,80,000. Fine. Now, what was the step 3? It was step 1, it is step 2, and step 3. So step 3 includes the calculation of value of firm's goodwill. Okay. And what will be the formula for that? Total capital of new firm minus net worth excluding goodwill. Instead of that, you can also write down net worth including goodwill minus net worth excluding goodwill. Both are same. Alright, let's put the values here. This total capital is 12,80,000 and this is 8,80,000. How much it comes out? 4 lakh. So this 4 lakh is what? Hidden goodwill. Alright, this is the hidden goodwill. Okay, now we need to calculate the share of incoming partners in this hidden goodwill, because this entire amount of goodwill belongs to the new firm. Okay, see, here we will not do the reciprocal. Okay, so 1 lakh is the share of new partner. He is supposed to bring that amount, but he has not brought it. Okay, but old partners are not going to spare him, they will do the adjustment. Right, now it's time to pass the journal entries. 2 entries we need to pass, because the question asked about 2 entries, one related to capital and another related to goodwill. If the question was asking only single entry related to goodwill, then we would pass one entry related to this only. Understood the point? Cash account debit to Puneet's capital account 3,20,000 being capital brought in cash by new partner. It's simple entry, already you know that. Now let's move on towards the entry of goodwill. Okay. Puneet's current account debit 1 lakh to R's capital to Vikram's capital account, being share of goodwill to be brought by new partner adjusted. Okay, will debit current account here? Already have told you the reason, because that will be specifically mentioned related to goodwill. Because capital he is already bringing. If we do the capital, then he will be there in the benefit. Okay, he need not bring the 3,20,000 plus 1 lakh. Okay, he will bring that only 2,20,000. Because 1 lakh will be adjusted on the name of goodwill. Okay, so that is why specifically it will be mentioned by current account. You can place your capital account as well, but current account is appropriate, as I told you. Now, this amount will be distributed between these two in sacrificing ratio. But in this question, sacrificing ratio will be similar to old profit sharing ratio. So let's do the division here. So it will come out 60,000 and 40,000. Okay, so once again have a look. 2 entries will be passed, one related to capital, cash account debit to Puneet's capital, another related to goodwill, Puneet's current account to R's capital to Vikram's capital. Fine, 60,000, 40,000. Let me tell you one more thing. This entry is as similar as the case number 5 we did in the previous video. Okay, nothing changed, only the situation related to the treatment of goodwill has changed. Okay, so this is the one variety of question on the treatment of hidden goodwill. There can be one more variety of question. We are going to attempt that as well. You can see the question on your screen. So I have written the question here. Problem number 14. Balance sheet of Arav and Vikram, who share profits and losses in the ratio of 3:2 as at 31st March 2020 was. Okay, so this is the old ratio. In liability side, we have sundry creditors, reserve, profit and loss account, Arav's capital and Vikram's capital. Fine. In asset side, we have cash at bank, debtors, stock, furniture, plant and machinery, advertisement, suspense. Okay, and the total is 5,30,000. They admit Puneet as a partner from 1st April 2020 for 1/5 share in the profits of the firm. 1/5. Okay, Puneet brings in rupees 1 lakh as his capital. Give journal entries for bringing capital and for the adjustment of goodwill. So it is asking 2 of the entries, one for capital and another for goodwill. See, this is again the case of hidden goodwill, because here the value of firm's goodwill is not given, and it is also not given that how much amount as share of goodwill was brought by new partner. Fine. Okay, so very first let's calculate the value of hidden goodwill. Thereafter we'll pass the entries. Alright. So the same steps will be followed here. Very first we will calculate the net worth including goodwill. Okay, or you can say the total capital of new firm. How it will be calculated? On the basis of the new partner's capital. How much amount of capital he has brought? 1 lakh. That will be multiplied with the reciprocal of his share. Okay, so 1 by 5 will become 5 by 1. It will come out rupees 5 lakh. Fine. Okay, now we will go to step number 2. In step number 2, we will calculate the net worth including goodwill. Okay, there are two formulas. One, sundry assets minus outside liabilities, and another formula. Okay, you have that all the values are given here, so second formula will be applied here. Okay, so see that. Very first we will put the adjusted capital of old partners. So that is 96,000 plus 64,000, that is 1,60,000. Plus we'll take new partner's capital, that is 1 lakh. Plus we'll take entire amount of reserve, that is 1,20,000. Plus we'll take entire amount of profit, that is 50,000. Okay. Now one more thing was there, fictitious asset. It is supposed to be deducted, that is fictitious asset minus 30,000. Anything else is left? I don't think so. Alright, so let's move on. Let's calculate that. Okay, so it will come out 4 lakh. Now step third, we'll calculate the value of firm's goodwill. From this we'll deduct this. So 1 lakh is what? Hidden goodwill. Okay, now in this amount of hidden goodwill we'll calculate the share of Puneet. Okay, so Puneet is there for 1 by 5, 20,000. Understood the point? Now, this 20,000 will be divided between the sacrificing partners. Fine. Now we can pass the journal entry. Okay, so on 1st April 2020 we will pass the entry. This is the problem number 14. Okay, so first entry will be there for bringing capital into cash. How much amount he has brought? 1 lakh. Alright, so this is the entry for bringing the capital. Now we pass the entry for hidden goodwill. Okay, police current account debit 20,000 to Arab's capital to Vikram's capital, being share of goodwill to be brought by new partner adjusted. Now this amount will be shared in sacrificing ratio. Okay, the same situation will be applied here. The old ratio will be treated as sacrificing ratio because no other changes there. Okay, so 12,000 and 8,000. Fine. Once again, have a look. 2 entries will be passed. One will be there for bringing the amount of capital, and another will be there for the adjustment of goodwill. Okay, so there can be some other varieties of question as well. Like in this question, one more situation could have been added if in the question revised values of assets and liabilities are also given. Then we would have done adjustment for that as well. Okay, so it depends on the items or the situations given in the question. According to that we will do the treatment. Okay, but how to recognize that whether the question is of hidden goodwill or not? I told you there are two situations. One, when value of firm's goodwill is not given. Another, when new partner is not bringing goodwill in any form. Understood the point? Okay, so it was all about the concept of hidden goodwill. We have discussed it in detail. Okay, very soon I am going to meet you in the another video with another concept related to the same chapter. Till then, thank you. Bye bye.